Hello, good afternoon. Good afternoon, Aziz Jimo. Good afternoon, Prince. How are you doing today? It's a pleasure having both of you here. Yes, indeed, it's a pleasure having you here. Kindly let us know if the audio level is good to go, if it is loud and clear. If it is, then type in the chat section so that we can start this training on time and then finish on time as well. Today, we're going to be focusing on trading strategy based on price action. And if you think about it, all the strategies out there in the world are all based on price action. And we're going to explain as we proceed. Right? Thank you. Prince said, good. Audio is good. As Jimotu said, audio is good as well. Thank you for the confirmation. So we can start now properly, get the ball rolling, and then deliver the information that we have for you in a timely manner. Guys, as we proceed, if you have anybody that is interested in joining us for today's session, kindly send the link to them. You can also post this link on your WhatsApp status or your Instagram, Facebook, Telegram, on other platforms that you are on. Thank you for that. Price action trading strategy is the topic for today, right? And it's a pleasure having both of you here. Hopefully others join us in good time, right? It's just about 3 minutes after 2, and we hope people join in good time. Not sure why people don't come on time, but there's nothing much that we can do, but then do the needful and then proceed accordingly. So it's a pleasure having you guys here, right? And this training, this webinar is brought to you by 10 Trade. 10 Trade happens to be the broker of choice, right? As 10 Trade is the broker of choice, right, we encourage you to learn by attending the webinars that we conduct and then asking questions, right? Asking questions. The best way to learn anything in life is through questions. Now, let me ask you guys a question. Yes, let me ask you guys a question before we even proceed. Do you have any question for us? Yes, that is the question. Let me ask you guys this one question for the two people that are here. Okay, somebody else has just joined us. Do you guys have any question for us before we proceed? Anything that is bothering you? Anything that has been on your mind with respect to the trading? We could quickly address it before we dive in fully. And if no question, no problem, we will continue with the information that we have because we want to ensure that you are well fed today with the right information. So if you have, please type it out in the comment section. And if not, then I will continue. Okay, a quick disclaimer, the information we're going to be giving, we're going to be sharing with you today is not going to guarantee success. It's what you do with the information that will determine if you are going to be successful or not. Thank you. As I said, no question yet, sir. Okay, thank you. So with that said, also note that this business carries a high level of risk. So ensure to protect your account, and that is number one. Ensure to protect your account by using the proper lot size, the proper volume. So always ensure to minimize your losses in the business. So this trading strategy is under the technical analysis, it's under market analysis, right? Market analysis has to do with the fundamentals and also technicals. Today we're going to be looking at the trading strategy based on price action. I won't say based on price action. You have a lot of things that are around price action. As a matter of fact, everything is around price action. When you look at the likes of the Bollinger Bands, or you look at the moving averages, whether it's simple or exponential, you look at the oscillators, you look at the MACDs, the RSI, Relative Strength Index, whatever you are using, even if it is patterns, if it is head and shoulders, harmonics, Fibonacci, whatever the case might be, right, that has to do with trading, everything still boils under price action. And we're going to be looking at price action to give us a strategy. This strategy is based on price action, support, and resistance. It's a simple one, It's one that I use on the regular. It's one that I have used this week, and it's one that is resulting in pips. And this is under technical analysis. So Kanayo Konko, you're welcome as well. This is under technical analysis. This technical analysis, this strategy, basically is going to help us with entry and exit, how to enter the market and also how to exit the market. Most times, a lot of traders normally complain that they don't know how to enter and they don't know how to exit based on the strategy that they're using. So in return, they end up changing the strategy to another one. And then before you know it, the same thing happens. The new strategy is not working. And then they change that one again to another one. And then before you know it, they have used so many strategies within a short period of time. Guys, let it be known that there is no strategy that is 100%, right? You need to stick to one strategy and then know when it works and when it is not going to work. So you know when to use it and when not to use it. I repeat, there is no strategy that is 100%. I hope you guys understand what we just said. There is no strategy that is 100%, right? So entry and exit for this price action trading strategy, which is under technical analysis. And the technical analysis simply has to do with the charts. You have to look at information from the charts. Another thing about the charts, a lot of traders do not know how to identify the trend. And that should be one of the major things that you should start working with. You should be able to identify the trend because it is going to help you with respect to the directional bias. Identifying the trend is going to help you to know whether it's an uptrend or downtrend, whether you want to buy or whether you want to sell. So we're going to look at this trend shortly to explain it to you, and then hopefully you understand, and then you can start working with it as soon as possible, right? So let's proceed. The types of markets that we have, the types of market trends that we have the uptrend. Uptrend simply means that the trend is up, the market is moving up, or you can as well say it is a bullish market. Bullish simply means it is going up as well. So when you hear bullish is equals to up. And downtrend simply means that the trend is down, that the market is moving downwards. And as we have this, it simply means bearish. So when you hear bearish means the market is moving down, the trend is down, the direction is down, right? So you would also need to, apart from understanding this, right, you need to also practicalize it by looking at the chart. So as we proceed, we'll look at some charts and then see the kind of trends that we can make out of it, and also whether it's clean or not clean. So we also have sideways market. Sideways market, obviously, it means that it is not up and it is not down. It is struggling between the two, right? Which also depicts the battle between the buyers and the sellers, because the two participants in the market are the buyers and the sellers. The buyers are the ones taking the price up. As you can see, the uptrend is to the buyers, and that's why we said as it's pushing higher and higher, it's an uptrend higher and higher. And as a buyer, you want the price of anything to go up. As a buyer, you want the price of any instrument, any commodity, whatever it might be, you want it to go up. And the reverse is the case for a seller. As a seller, you want the price of that thing to go down. As the price of that thing is going down, it simply means that you can sell and make money. So you can buy and it goes up, you make money. You can sell, it goes down, you make money as well. But sideways market is in between buying and selling, right? So when we have sideways market, as you can see the third diagram here, when you have sideways market, it's always best for you to wait for it to clear out. Clear out meaning that wait for either the buyers or the sellers to take control, right? Wait for the buyers or the sellers to be in the lead, right? Good. If you have any questions on this market trends, let us know. We're going to look at charts as we proceed that will help you to understand how they look like as well at the end of the day. By the way, for us to understand this time frame, and for us to understand this chart that we mentioned, is also based on the time frames. I repeat, it's also based on the time frames. The time frames will also help you to determine the type of trader that you are. So this time frame is very, very important. We have time frames and it is very, very important. And we have 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, 1 day, 1 week, and 1 month. Now, this is how the time frames work because as we said earlier, the time frame is going to help us to know the type of trader that we are. Remember, we're still talking about price action trading strategy, and we're going to define price action shortly and then show you some examples how to look at your charts based on price action. And that is a trading strategy for you, looking at your chart basically for entry and for exit, right? So this time frame will help you to know whether you're a scalper, intraday, swing, or position trader. And they have their own different parameters, right? If you are a scalper, look very well. If you're a scalper, as a scalper, you are using the lower time frame. Remember, we talked about time frames in the previous slide. So as a scalper simply means, first of all, that you are in and out within a few minutes, very fast. A scalper simply means that you are in and out within a few minutes, right? And then you are using this time frame. These are the time frames that you catch a scalper using. The likes of the 1 minute, 5 minutes, and 15 minutes time frame. So based on this scalping, it is fast, right? It means that you are going to be very active in the business. But then we always say that trading fast is not the way to go, especially if you are new or you are struggling. If you noticed, I'm talking in a nice, soft, and slow manner, right? For you to easily grab what we're talking about. Even with the experience I have, I can decide to finish this class in the next 10, 15 minutes. We're taking it slow and steady for you, and that is what we normally advise. Take it slow and steady. For you to take it slow and steady, we advise you either use the day trading type of trader or the swing trading, right? It's either between the day trading or the swing trading. Why? Because of the time frames that you'll be using, number one, and then also because of how you're going to be watching and managing your trades. This is very key, very, very important. Now you notice that the day trader over here, intraday trader, is holding trades for hours, meaning that within that 24 hours, you place a trade, a maximum, you hold it for a few hours, and then you close it before the day is over. That's what it's called intraday. While the swing trader can hold positions for days or for weeks, right? And these are the time frames that are being used as well. If I were to advise you that you are here with us in this class, the time frames to use, the best time frames to use, well, there isn't really best time frames, but the time frame that is comfortable for you to make use of without having much issues, if you ask me, is between the 1 hour and the 4 hours. You can see the 1 hour, 4 hours is found under the day trading and also found under the swing trading. So when you use the 1 hour, 4 hours, you can easily be a day trader or a swing trader, right? And this is the style of trading that I normally use. And of course, from my experience, I can tell you that this is the way to go. It doesn't give too much headache. I don't stare at the market, even though I'm a trainer, I'm a trader, I'm an analyst, I'm all. I don't stare at the market all the time, right? When there's an opportunity based on the way I have set my chart up, then I come and I check on it, right? Position trading, the issue with position trading for me is that it takes a long, long period of time. First of all, you're going to be holding trades for months or even years. And these people are the likes of the Warren Buffett. And we are not yet, I am not yet at the level of Warren Buffett, where you can enter a position or a few positions and hold them for months or for years. Now, this is actually what you call investing. This is the real investing that people are doing today. When you hold a trade for months or years as a position trader. That's why if you ask around, you hardly find people that are position trading. Most people will say they're scalping. Why? Because they want to make money very fast. But this is wrong, right? It's not the right way to go. is either between day trading or swing trading. What we can do on that 10 trade is to advise everybody on how to go about the business, how to go about the market the proper way, and then you guys, you take the advice and then you run with it. For position trading, you're going to be using the daily, weekly, or the monthly time frames, right? You're going to be using the daily, weekly, or the monthly time frames. So this here has to do with the time frames and the type of trader that you are or you will be. So please pay attention, take note. It's very, very important. Day trading or swing trading is the way to go, right? So also you need to determine, are you a trend trader or are you a counter trend trader? Remember we mentioned earlier the types of trends that we have, where we said we have an uptrend. When you have an uptrend like this, where the market is going up and up, it simply means that the buyers are in control. The buyers are the ones leading. The buyers are the ones in charge. So if you want to follow the trend simply means that you are a trend trader, right? To follow the trend, right? To follow the trend. It simply means that you are a trend trader, and it means that you want to buy over here. So this is what you want to do. You want to buy on this uptrend as a trend trader. I mean that you want to follow this. But as a counter trend trader, it means that you are going against, it means that you are going against the market, right? So as you are going against the market, what you need to be doing over here is looking for selling opportunities, right? Selling opportunities. We need to take note of this because you need to determine right now the type of trader that you want to be, whether a trend trader or a counter trend trader. And I always advise what we're doing here is telling you what we're doing, what you need to do, why you need to do it, and then we give you advice along the way. We're giving you this advice based on our own experience, based on the experience that 10 Trade has. And that's why 10 Trade, the broker of choice, is the broker to work with, right? So if you look at what we're talking about here, we need to understand these things and then apply them. So I hope that you guys are paying attention and I hope that you're taking down jottings as well. This recording would also be made available on the YouTube channel, and I'll drop the YouTube channel again for those that might not have it. I'm going to drop the link shortly so that once you have it, you can as well connect to the YouTube channel by subscribing, right? Subscribing, turning on the notification bell, and then when the videos are dropped, you get notified and then you do the needful. So far, so good. Are you guys understanding what we're talking about? Let's get feedback from you before we proceed. Are you understanding what we're talking about with respect to the time frame, the type of trader that you are, and then also whether trend trader or counter trend trader? Because we always say the best thing we can give you is the proper direction, the proper way to go about it. Unfortunately, we can't do this for you, but then we can help you with respect to giving someone fish and then showing someone how to catch fish. 10 Trade believes in showing you how to catch fish because it will last you a long time. Okay, and I thank you guys. You said yes, yes, and then as they said, do counter trend traders do profits in trade? Yes, counter trend traders do profit, but it is much dangerous, right? It is more dangerous because, oops, sorry, it's more dangerous because if you look at this as an example, the market is going up in this manner. As it's going up, it is showing that the strength is to the upside. It is showing that that $6 trillion in a day, right, is going up, is pushing higher and higher. So as you have this $5 trillion pushing higher, you now want to go against it. You want to go down. As you want to go down, how much is in your account? Obviously, you cannot battle against $5 trillion, even if they combine all our money together here, even all the money in Nigeria. You can't battle against the market, $5 trillion. So we always advise to go with the market, but you can still be profitable as a counter trend trader. Don't get me wrong, but your timing, your timing is very key. The time is very key because at the end of the day, what goes up will still come down, and what goes down will still go up. But it's just when exactly that will happen. So the timing is very key, right? Now, technical analysis, as we're still talking about price action, we're now going to define price action and relate it to support and resistance. for us to understand better. Because price action is the strategy, and then we say price action is the strategy that can easily lead to other strategies. And that's why we're hammering on price action. Because some of you are already trading and then you're using one strategy or the other. But this price action we're talking about, you can easily marry it, you can easily merge it to whatever you are using. So let us quickly define what price action is. And as this said, a position trader that places a trade, what if he lost his money before the day runs out? And if he lost his money, then he lost his money. But the truth now is that a position trader most likely will be using a stop loss that is large, because remember, you're using the daily, weekly, or the monthly time frame. So if you're using a stop loss that is large and that trade should get closed that same day, that means that probably there was news, there was heavy volatility that took it the other way in an aggressive manner. So that is also possible. But position traders tend to hold trades for a long, as they hold trades for a long time. I'm not even saying they're holding profit for a long time. A lot of them could be holding loss for a long time, which eventually turns into a profit. Because you need to understand the concept of position trading. Position trading, as an example, you have a country. Let me use this example for you. You have a country that all of a sudden, let me use Japan. You remember the tsunami that happened in Japan? I can't remember what year. Maybe that was 2000 and was it 14 or something? I can't really remember. But the tsunami that happened in Japan, people can't remember. If you go to Japan, you probably might not have traces of it because the economy bounced back fast. But at that time, everything came to a standstill. The economy came to a standstill. Everything was downhill. As it was downhill, that is the trend. The trend at that point in time was down. But some people started buying, started going counter, and they went counter, and then they were incurring losses, right? But as they were incurring losses, they knew that it was going to still bounce back because of the information they had, the fundamentals, the country. Just like saying if something like that should happen to Nigeria, bouncing back obviously would not be the same compared to Japan. Japan is a very strong economy. And then lo and behold, after the counter trend that you took, it bounced back and then you make money. But that is a position trader. You're going to have to wait for a long, long time, right? So quickly, what is price action? Price action is known as the action of price, is known as the behavior of price, is known as the direction of price, and so on. Guys, as your question is coming in, I will forge ahead so that I can finish on time. When we finish on time, then we can look at all the questions. But if we continue with questions, then we'll not finish what we have for you today. Hope you understand that. You can continue dropping your questions, and hopefully as we continue, we can answer them, or when we finish with the information we have for you, then we'll come back to your questions. Okay, so price action, as we just said, is the direction. Remember, we just talked about the trend now of price. That is what price action is. So price action is just studying the chart for what it is, not using indicators, not using anything, right? But price action strictly based on what? Based on the chart as it is, based on the candles, bar chart, line chart, based on the naked chart. That is simply what price action is. And then we have some specific price action candles, because candles is what we're going to be looking at. But then we have some candles on the chart. We're going to cross over to the chart shortly. We have some candles on the chart that give us specific information. Don't forget, once again, we said price action is the direction of price, the behavior of price, the trend of price, the movement of price, and so on. And then if you look at the breakdown, price is known as the price of your laptop, the price of your phone, or the value of your laptop, the value of your phone, or the rate in which your phone is going for, or the costs in which your phone is going for. That is price. And direction is the movement. What direction is it going? What direction is it going? What movement is it going? Who knows? What direction did that car go? Which way did the car go? Which way did the car move? The behavior of the car, and so on. So this is price action for you for the definition. And then we said now that we have some certain candles. Guys, if you cannot write this down, please actually do screenshots of this and have this, because this is very, very important. These candles on their own, right? These candles on their own, it helps us to understand what should happen next. It helps us to understand what should happen next, because apart from these candles here, you can see we have the hammer, at the bottom here, we have the hammer or pin, and we have like the engulfings, the bearish, bullish engulfings. These here are the four that I like to focus on, because when you have a bearish pin means it's time to sell. Bullish pin means time to buy. If you look at the arrow associated with the candle involved, it's giving us the direction. Remember, we said price action is the direction of price. So we need to do this and take note of this. Guys, you can do a screenshot, preferably for now, for this one, as you might not be able to quickly draw it. Some of you might already know the candles, good. Some of you might not be using the candles. Please adopt them into your trading. Pay attention to them. When you see them in your chart, then use them accordingly. So we're going to use this price action to talk about support and resistance. Support and resistance, in this case, support and resistance, right, has to do with the price action, obviously, but it has to do with what we call demand and supply. We're going to use demand and supply to explain support and resistance. You remember, we're talking about price action. We're talking about price. Guys, let that sink in. If there's anything you're going to take home from today's webinar, let it be price. That everything we're doing is price. We're buying price. We're buying the price of something. We're selling the price of something. It's price. You want the direction, that is the price of this XYZ commodity instrument, to go up, to go down. Everything is price. So demand and supply. Quickly, who can help us out? I can see some more comments came in. So, but let me ask the question, and while you ask the question, I'll try and address the comments I can see here. I think they turn into a conversation, right? So demand greater than supply. Who can tell us what happens to price? You remember we're talking about price. So the number of times we're going to mention price today could be up to 1 million in just this 1 hour that we are together. So what is the direction of price? Based on demand greater than supply. Is the price going to go up or down? Someone should answer and then give us your example, your reason. Okay, as Jima said, do counter trend traders do profit in trade? Yeah, I addressed that. I said yes. Position trader that places a trade, what if he lost his money before the day runs? Okay, I've answered that one. Then Solomon Musa now said a position trader can bet on Nigerian economy now since we are changing government. Oh God, that's a good one. Oh, no wonder why as Jimo laughed as well. So let me address it so that I don't have way too many comments to come back to. We're not here to talk about the Nigerian economy. Please, the Nigerian economy is rather unique. And if you notice, we don't have the NGN listed on, what you can trade internationally for a lot of reasons, right? So we'll leave the Nigerian economy and politics out of this. So Solomon Musa, thank you for that comment. As Jimo said, that position trader might lose. Oh, I don't know about that. Let's continue. Solomon Musa said he takes a position and wait for a long time, goes up. It's the same concept of what we're talking about. Yes. Okay. Okay, you said goes up. Yeah, okay, to answer the demand greater than supply. Thank you, Solomon Musa. First answer. As Jimo said, price goes up. If I can say price goes up. Solomon said, I just used Nigeria as an example of a weak economy. Okay, in that context, yes. Right, maybe that's why as Jimo was laughing because of Nigeria. Nigeria is, but in that context, yes, indeed, because the time of Japan being weak as an economy, USA has been weak at one point in time during the 9/11, even during the recession 2008 and so on. But they bounced back because of the kind of country that they are. And then bouncing back, it means that if you go against that bearish move, that recession or that earthquake tsunami period, it means you're going to be in negative for a while, but you hold it as a position trader for years. And then, of course, you recoup everything with more. Wisdom said price goes up because people buying and more are more in the market. Exactly. Thank you. As Jimo said, when there are more demand, the price tends to go up. Thank you guys for your beautiful answers. And you are all correct. Demand greater than supply simply means what? Simply means I normally use one S word, which is known as scarcity, right? It is scarcity that will make there to be more buyers. As somebody said, let me look for the person. Someone said more buyers. Okay, can't find the person again. Okay, but demand greater than supply is when we have scarcity. Thank you. Wisdom said price go up because people buying. Yeah. So we have more buyers. And why would we have more buyers? Because of scarcity. An example is fuel scarcity. When you have fuel scarcity, we have more buyers than the sellers, right? And of course, the price will go up. And that is something that we have all experienced at one point in time. And then you have other examples that you can relate to as well, right? That can easily make the price of this or that to go up. Naira, what about Naira, the currency Naira? It was in high demand, right, a few weeks ago because of all what was happening with the CBN policy, with the bank, with the new notes, old notes, and a whole lot of other things. So the same thing applied, price went up. So you just said demand greater than supply, the price will go up. And of course, the opposite is for supply greater than demand, the price will go down, right? So the price will go down here. But can somebody give us an example for supply greater than demand? Give us an example that we can relate to. For demand greater, I told you about force scarcity, and then I told you about the Naira as well, Naira scarcity, currency. Anything scarcity, that is going to ultimately lead to what? It's going to ultimately lead to demand being greater than supply. Simple. But can you give us an example that we can relate to, that when you mention it, everybody would agree with you? Because as we're all here to learn, I'm loving your comments, by the way. Thank you guys. Like the example that Solomon Musa was giving, weak economy, using Nigeria as an example. You guys talking about this, answering the questions, even asking questions is fantastic. And that's also always what I like, based on engagement. So guys, can you think of any example based on supply greater than demand that will make the price to go down that we can easily relate to, right? I'm going to wait for you guys answer. I'll put S here because my explanation in one word for this has to start, it starts with S as well. I can't see any comment coming in. Oh wow, no problem. Supply greater than demand, the price is going to go down. Okay, thank you. Since some of us are typing, um, as Juma said, towards the end of the year, I think the Naira supply will be greater than demand because of the deadline of the old Naira notes. That's a good way to look at it. The supply of the old Naira notes, right? I think the Naira supply, that's a good way to look at it because everything has to do with supply and demand at the end of the day. And then people will be trying to get rid of that thing very fast. Get rid of it, right? Because the surplus is plenty, right, in the market. So something that is seasonal, something that is plenty also. I can see Solomon Musa said food availability during farming. During farming brings prices down. Yes, okay, sorry, I read the farming wrong. I thought the farming was farming of drought. Sorry, farming, yes, exactly. When you harvest in the season, that's why I said season. Thank you. I'm reading all your comments. So season, there's surplus of the food that he mentioned. Maybe it is tomatoes, maybe it is onions, but as there is surplus of it, the price is going to go down because they have to sell it fast and all, right? And Wisdom said education system in Nigeria and lack of job in the country. Please, let's leave Nigeria alone, guys. Let's leave Nigeria alone, right? Education, well, we're talking about supply greater than demand, price goes down, right? So maybe you could even elaborate some more on this education system in Nigeria and lack of job in the country with respect to supply greater than demand, because the price is going to go down, right? So maybe you can relate that. Is the price of things going down because of the education system in Nigeria? If yes, according to you, how? And lack of job in the country? If yes, according to you, how? But let's leave Nigeria alone. We are more, do you want to make your money in Naira or do you want to make your money in foreign currencies like dollars and pounds and the rest? That is the question for you. So the moment I said price of goods goes up during festive season because of increased demand. Now, if you look at the same thing, right, if it's like tomatoes or whatever the case might be, right, like food, as you mentioned, price of goods like festive season, like rice during festive season, the price goes up because of demand during Christmas period. Ram goes up during Ramadan period, and so on, right? So if you understand this demand and supply, that means that in a nutshell, you guys have been able to explain to us this aspect of support and resistance, which is what we have right in front of us. Remember, we're going to look at some charts shortly, We're going to look at a few charts to explain and to understand this thing better. Once you understand them, you can practice, because the truth now is that we cannot practice for you. We can only show you how it's meant to look like. And then you practice, and if you still need further assistance, then you can get back to us, right? So this support and resistance we talked about over here, this is it right in front of you, because support and resistance, don't forget, is based on price action. And don't forget, price action is the direction, the movement of price. You can see price from here moved up, as you can see. The price moved down, price moved up, price moved down, price moved up. You can see price is moving up, moving down, and it's moving up and down because here is support. Support is where the price goes up. Here is resistance. Resistance is where the price goes down. And then before you know it, as price is moving up, moving down, right? As price is moving up, moving down, you'll notice that it is bouncing within the support and resistance. So if you are going to say this market that we have here, right? Who can help us? Is this an uptrend or is this a downtrend market? Is this an uptrend or is this a downtrend market? Who can help us out so that we can cross over to the chart and look at a few chart examples and all. So is this an uptrend or is this a downtrend? Okay, I can see some comments scrolling in. You can see some comments scrolling in. Okay, awesome. So let me just read them out for us to see. And I like the fact that if you noticed, you guys said the same thing, which is what I love. I love this because if you notice, we did not ask you a particular question on purpose. We did not say what happens when demand is equals to supply. On purpose, we did not say that because once you see the price, the way it's moving, that's price action. Remember, this is a strategy on its own. Then you'll know, according to as the Gmo that says sideways, you know that this is sideways. And then Solomon says sideways ranging. And then if you says sideways ranging, you can call it sideways market, ranging market, consolidating market, equilibrium market, anything that has to do with that sideways market depicting demand is more or less equals to supply. Simple. Thank you, guys. But this is not going to be so forever. The price is either going to break out of the resistance here to the upside, it's going to break out of the support here to the downside, right? Eventually, it's going to break out. And to break out, why? It will break out because more money will be pumped into one direction. Simple. And that more money being pumped into one direction, this is something that normally happens during news period, high impact news period, just for us to be aware that the news also plays a role in what we're doing here. But then the news will be seen on the charts. Everything you do on the chart, you will see it over here, right? So this is key, very, very important for us to understand that everything will be on the charts at the end of the day. So based on this aspect of breakout, this is what we now have, right? You now have the market breakout to the upside. And then as it breaks out of this resistance here, immediately the other side becomes support. And then here becomes resistance, meaning that it is forming floors like 50th floor, 51st floor, 52nd floor, 53rd, and so on. And even lower as well, 49, 48, because the market can break to the downside as well. So it has broken out here. You can see this is now support. And what support is where you want to buy. And don't forget those price action candles that we mentioned. You find those price action candles here. And this is I beat my chest now. I don't know that you can hear me beating my chest. I beat my chest that this is a simple and complete strategy. I personally, I have been using this for years. I use it on a regular. I have used it this week and I will still use it. It works. It has proven to stand the test of time. All you guys need to do is to practice it and then it will also make sense to you. No need to jump from one to the other. So from this support, you get those specific candles that you use as your trigger. You enter here, it pushes higher to the resistance, breaks the resistance, and once that happens, the other side turns to support. And then as the price is coming back, because it has to come back eventually, no matter how high price goes, it will end up retracing to end up pulling back and all. So as it starts to pull back, this is resistance. This is now where we want to buy again. You can see that we're being able to identify the areas where we want to buy, and then we enter here based on those candles, and it pushes higher to the resistance. Resistance, by the way, is where you take your profit, or it can as well break out. Here turns to support, the new support over here, here to support. And before you know it, you have the market moving in this manner. As you have the market moving in this manner, it is now showing you a full-blown uptrend, right? As it's showing you a full-blown uptrend, a lot of traders will not see this until it is now a full-blown uptrend, but you were able to identify it early enough and you're able to enter early enough and then ride the wave. That's how you make tangible money in this business. You allow the trade to run and then run and then run and then run in your favor a lot, right? And before you know it, before you realize it, you have the market looking something like this, a full-blown uptrend. But because it's a full-blown uptrend, you can now identify based on price action, you can identify the support and the resistance, and you can now take advantage. Yes, you can take advantage of it. This is a complete trading strategy based on price action. We said price action, but you can see the price action has led to support and resistance. Those candles that you find at the support and resistance levels areas. You can see here price now on this diagram is presently at the area of support, right? If you had a candle here, you'd have entered here to buy and then to take it higher, right? So this is how we should be trading. This is how I personally have been trading. I like it simple, KISS, keep it simple. The final S, I don't know that you guys know what that S is, right? It stands for stupid, meaning that you should just keep it very, very simple for anybody and everybody to be able to understand. And that is what 10 Trade is doing for you. 10 Trade is giving you this information for you to be able to what? For you to be able to take advantage, for you to be able to easily wake up and then see the chart, understand the chart, and take advantage of the chart. Speaking of chart, now we're going to cross over to the chart. We're going to cross over to the MetaTrader 5 trading application, and then we're going to look at what we have right in front of us here, because this is the chart. As this is the chart, we should be able to easily see the price action. Remember, the price action is what? The price direction, the price trend, the price movement. So who can tell us what is the price direction? What is the price trend? What is the price action? And you can see this chart over here. There's nothing on the chart. There's no indicator. There's no tool. There's nothing whatsoever on this chart. This is what you call a full-blown nude naked chart, meaning that this chart, you should be able to easily look at it and get information out of it at the end of the day, right? So who can help us out? What can you see here? Is it moving up? Is it moving down? What is the trend? What is the price action? Whenever you hear price action, you should now be able to understand it much better, right? You should now be able to understand it much, much better. And trust me, you will do what? You will do great exploits, okay? You can see we have the first answer coming from Aziz. Aziz and Wisdom, are you guys together? It seems you guys are writing the same answer, or is somebody doing copy and paste? Because your answers came in the same minute, just some seconds apart. When we look at what they both wrote, is more or less the same thing. Aziz said it's an uptrend market, and Wisdom said is an uptrend. Okay, you said is. So I was saying, are you guys together? Because it seems that you guys are saying more or less the same thing. And I like the fact that when you guys say the same thing, it means that you guys are seeing the same thing. As you're seeing the same thing, you're understanding what we're doing here, right? And then as you're understanding, you can make money. Why not make money? When do you want to make money? You want to make money now. Guys, you need to fund your account. There's no two ways about it. When you guys fund your account, let me know, right? Let me know so we can follow up with you on all of these things. You need to fund your account and start trading now. And when you start trading, use a small risk because it will play a great role on your psychology. There's a difference between the demo and the live. I always advise the live. Why? Because there is no emotions attached to the demo. You lose $1 million on the demo, it doesn't affect you. You lose $1 on the live, you feel it. And you need to feel it because you want to make money now. Okay, as the Jimo said, once I do that, I will let you know, sir. Let me know. You can let me know as you're about to make the deposit. Let me even know how much deposit you want to make. Now, I want to do something because most people, we say, can you see the light at the end of the tunnel? Right? People just say that, but people do not fully understand that statement. The light at the end of the tunnel. What is at the end of the tunnel in this business? Isn't the money? Isn't it the money you want to make? Isn't it the results you want to have? So let's start looking at the end and then work our way back. Because when we start from the beginning of the tunnel and trying to get to the end, most people they fall short. Some people don't even start. But then if you can get to the tunnel and you know what's at that tunnel, the end of the tunnel, it will ginger you to get there. That's what I'm saying, guys. When you fund your account, let me know, right? And then we'll work something out for you, right? We'll give you more information or whatever the case might be. Also, let me know how much you're funding. Please don't go and fund $5 and $10 and then expecting a whole lot from me. No, right? The more you fund, of course, the more you would get. I don't want to tell you what you get, but trust me, we'll work something out that would help you because you need to be action takers. If you are here, you're not taking jottings, you are wrong. If you are here and you're not going to practice after, you are also wrong, right? If you remember your NYC days, if you have served, uku uku, cover up in threes, you are wrong. If you are sleeping, you're wrong. If you are not in line, you're wrong. So if you're not practicing, you're wrong. If you're trading with a demo account, I won't say you're wrong, but do not do demo account for long. Cross over to a live account as soon as possible. So quickly now, I want to show you based on this chart that we have in front of us, this support and resistance that we have looked at, because you need to look at the way the market is moving, right? Look at the way the market is moving. I'm going to quickly try to do that for you. Look at the way the market is moving. I'm just going to trace this quickly, as you can see. Sorry if my tracing is not so accurate, but I'm just tracing, right? And as we're tracing in this manner, look at what the market is doing now. Look how the market is doing. Where is it going to, right? Because if you start from the very beginning over here, you can see over here, we had this area. It's an area, not a price point. It's an area of here, resistance. This is an area of resistance because the market went down. Then here is an area of support where the market went up, right? So we have like resistance, resistance, resistance here, support, and you can see it broke. You can see the size of this big candle. It broke out here. This was a breakout of this support resistance. Broke out to the downside, came back to the other side that should have acted as resistance, but it failed to act as resistance and pushed higher. It broke out of this resistance, and now you can see the support pushing higher. Now, let me tell you what price is about to do. This is an area here as I'm marking it, or rather, let me clean this up because it's beginning to look messy. I'll clean it up and I'll only draw this last one that we have drawn for you to see where the market is going to now so that we can take advantage. Because I tell traders in the class that these are the things that I'm also saying, and these are the things that I want to take advantage of as we're speaking. So as we're drawing this now, look at what the market is doing. The market now seems to be what? It now seems to be going down to this area. So I would patiently wait for what? I'll wait for the price to get here and see whether it forms any of those candles. Remember, we talked about those candles earlier, like the hammer, the pin bar, the engulfing. Remember, we talked about them where I said do the screenshot. This is what I'm going to be waiting for over here because once upon a time, it acted as resistance. And when it broke out, you can see it broke out and acted as support. So that means that as it's coming back to this place here, I'm looking forward to that trigger, that price action that will help me to take action and then buy and then take it higher over here, right? So this is what we're doing over here, as we can see. And trust me, this is very key, very, very important. The first thing we need to do based on this price action is to identify the trend. If you look at any chart, right? Any chart you look at, just make sure that it's giving you a clean and clear direction like this one that we have in front of you. Because this is Euro USD M15, right? I'm showing you M15 for a purpose because it works on all time frames. But before you rush down to the lower time frames, please have a good grasp of it from the 1 hour and 4 hours. These are the time frames that I use a lot, right? Right. But 15 minutes, 1 minute, even 1 minute, even 1 month, they all work. But it has to do with the speed. And you don't want to have any issue when any news comes out. Because when any news comes out, it can cause some whipsaws, it can cause some volatile moves that can easily take you out. This here too is clearly an uptrend on the Euro USD M15. But if we change this time frame to maybe 1 hour, right? Or maybe even 4 hours, or whatever the time frame might be, you can see that it's looking very like sideways. Look at this one over here from this Euro USD 4 hours. You can see this is where the market started from, right? Market started from here, went up, went up, went up, went up, came down, it's going up again. Now, this is where the market is presently. If you look at the two, if we're going to join an arrow between the two, you can see that it is more or less what? Sideways. This is how to know, this is the easiest way to determine whether it is a sideways market or it is an up market or a down market and so on. You remember when we were looking at it from the 15 minutes, the same one from 15 minutes, it started from here, right? Started from here, and then this is where it is here. So if you're going to join these two boxes together from this one here, I'll draw an arrow connecting this one to this one. You can see the arrow is pointing upwards. So this is the easiest way to explain to you how to determine the trend. Simple. So you determine the trend, and the next thing is where you want to enter to buy in an uptrend or sell in a downtrend based on you following the trend, right? Following the trend, you are a trend trader, and then going against it, you are a counter trend trader. Guys, do you have any question based on what we've talked about now? This is a complete strategy based on support, resistance, of course, price action. So price action is king. Price action is what we have been focusing on. And we said it works on different time frames. If you look at different time frames, first thing that needs to jump at you is the trend. And that trend is the direction, is the behavior, is the movement, is the action, price action. So we've been talking about, in as a summary, we're talking about the price action trading strategy that can help you for entry and exit, and it works on all time frames. When you look at all time frames, make sure that first of all, you can clearly see the trend. It's an uptrend, it's a downtrend, and as you can see the trend, you can now see where to enter and so on. So we have uptrend, we have downtrend, sideways market. Those are the ones that you need to leave alone. Those ones that can be very ugly at the end of the day. The ones that you don't need to leave, are the ones that you can see clearly, like this one, that will give us the information, right, of what we want to do. We want to do when price gets here, and we need that price action to pull the trigger to take it back up as well, right? This is a trend trader for you. So guys, if you have any questions as we are going to be rounding up now, right? And please don't forget, put into practice what you have learned. When you make your deposit or before you make your deposit, let us know and we can help you out at the end of the day, right? And then see what can be done for you. I always tell traders here under the roof of 10 Trade, 10 Trade has a signals group that you can join. 10 Trade also has the one-on-one 30-minute session that you can join as well. That's with myself, 30 minutes, where we'll discuss anything, can structure your trading for you, can give you a formula or any formula or whatever you feel that you need. 10 Trade can help you with that information. Guys, you have any question for us, let us know. This recording also is available on the YouTube channel, and here is the link again. So once you have this, right, once you have the link, you can go back, give it a little time for it to be uploaded. Once it's uploaded, then you can watch it and then understand better what we have done. And we always advise to watch it multiple times. If there is no question, okay, Wisdom said, sir, please, like you showed in the 15 minutes and 4 hours, sometimes they are different. Yes, they are meant to be different because you are looking at it from different angles. He said, in this situation, please, what can I do to understand the market? What you can do to understand the market, first of all, to stick to one time frame. I always advise to stick to 1 hour, right? Stick to 1 hour. I like 1 hour a lot. Stick to 1 hour. You can use 4 hours as well. Because the moment you start switching time frames, like this one here, the moment you start switching time frames, you can see this one is saying that it's an uptrend, 15 minutes. By the time you switch over to 4 hours, it might say it is a sideways market, or you switch over to the weekly. Weekly might say it's a down trend. As you can see, this is still down. So you can see weekly, 4 hours, 15 minutes is giving you different views of the market for the same instrument. That's why when you hear somebody say, oh, I want to buy Euro USD now, and then you say, oh, you want to sell Euro USD now. Both of you can make money. Why? Because you're looking at it from different angles. You can be in and out very fast, whether a few minutes or a few hours, while the other person can be in and out within a few weeks or a few months, longer period of time. So it depends on how you're looking at the market. So stick to one time frame. As the Juma says, sometimes some time frames like 1M, is that 1 minute or 1 month? Like 1M, when you check the chart, it might be downtrend, but when you check the 4-hour time frame to be uptrend, which one can we use? You see, that's what I explained to you right now. Before reading this, I just explained it where we said you focus on one time frame. Do not move, do not jump from one time frame to the other. Stick to one time frame. Whatever trend you see on that time frame is what you're going to focus on. Because by the time you're switching from time frames, it can easily be confusing. Some traders can do multi-time frame like a top-down analysis approach. That is them. But for you, you're still new or you're struggling, stick to one time frame. Then your trading can evolve in any way that you feel you want it to. But I love 1 hour. 1 hour is my go-to time frame any day, anytime, anywhere. 1 hour. So you can stick to one time frame and make use of it. So you said 1 minute. 1 minute is too slow, it's too fast. Please do not look at 1 minute, please. 1 minute is too fast. Do not look at, we talked about this not too long ago, so I'm not going to buttress on that. You can watch the recording. We already talked about the time frames you use. I always advise anything like 1 hour, 4 hours is ideal, because you should either be a day trader or swing trader. Do not rush to be a scalper. Position trading is also too long. Guys, any other question before we round up? If you joined us late, I think I can see one or two names. Maybe one person has joined us a bit late today. And some people signed up probably the internet and all, which is a regular thing for us in Nigeria, right? You can also access the video recordings on the YouTube channel. I've dropped the link for us to follow. Guys, if there's no other question, then we're going to be calling it a day. Guys, do the needful. Practice. Get back to us if you need any further assistance. We just appreciate another question. Okay, quick, because I need to stop the recording and end the class now. Ambrose, and he said, if we want to analyze price, which time frame should we start with? Right? You can start with 1 hour. As I said, 1 hour is not fast, it's not slow, it's very conducive. 1 hour, by the way, simply means that each candle you are seeing on this chart is lasting for 1 hour. I like 1 hour because when I analyze the chart on 1 hour, I don't have to check on that chart until the next 1 hour. So instead of staring at your charts, I don't need to look at it until the next 1 hour. If you're looking at it from 4 hours, you don't need to look at it until the next 4 hours, and so on. If you're looking at it from 1 minute, more or less you're looking at it from 1 minute, 1 minute. And that could easily what? That could easily cause confusion. That could easily be draining. The business should not be so much active, but more of passive, right? The money you want to make is passive money. That's why you might see some people say, oh, you can make money while you sleep and things like that, right? Wisdom, if you have another one, quickly shoot, because I need to round up now. And if I don't see any question coming from you, I'm going to close the platform. The truth now is that our questions will never ever end. But then, as we always say, reach out to us if you have any question later, and we'll see what we can do for you. Amber said, and after analyzing in 1 hour, in which time frame should we take the entry? On that same 1 hour. For now, you would analyze, you would enter and exit on that same time frame. It's easier, it's straightforward, it doesn't cause headache, it doesn't cause confusion at the end of the day. The same time frame is key, right? Okay, Wisdom said, if I notice the candle you showed us, how can we understand when the breakout will occur? To understand when the breakout will occur, how can you understand when the breakout will occur? Wait for a candle to cross to the other side and close. It has to cross and close. Some candles can cross, but do not close at the other side. They could retrace. That could easily be a false break, a false move, a fake out, as they say. So you wait for that candle to close. Do you understand? Wait for the candle that breaks out to close. And that is your initial clue that indeed it wants to break out. That is your initial clue, right? So do not be a victim of false breaks when it just punches outside. Wait for the close of that particular candle, 1 hour. wait for the close of that candle, 4 hours, wait for the close of that candle for more information on that particular candle. That's why everything is candle, and candle is price. So price is king, not the indicators that people are rushing to use. Indicators are lagging, as you have heard. I'm not the one saying this. It's people that are saying this because they have tested them and they have seen that truly indicators are lagging, they're behind, indicators are slow, and so on, right? So with that said, we want to say thank you. Some people are already signing out. We want to say thank you for joining us again on behalf of 10 Trade. We hope that you have learned a lot. Questions will never end. It's always good when we cross over to another platform like the Telegram group and ask questions. But we don't ask questions on those groups. You don't ask questions, of course, there won't be any answer because you can't just answer to invisible question, right? So I want to say thank you guys for joining us. It has indeed been a good one, right? We would see you same time at another time for another session. We have another session later today by 6 p.m., I believe, which is going to be handled by Toby Okunoga. So do well to join us for that session where you get to learn some more. And of course, for you to learn, you have to attend our sessions and then practice. Practice is very key, very important.